Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Company that we're talking about is Saksoft. I remember just around a year ago, there was plenty of interest in the company, but from the high point, in fact, the stock has corrected roughly around 15%. It trades at around 11 times its FY18 EPS earnings. So we're talking about the near term. If they can show some growth, then it'll be trading at roughly around 10 times out. What does the company do? Well, it's a niche as well as a specialist technology play. They're also into digital testing. They're also into cloud management. That's quite important, and that's enablement and management, and mobility and Internet of Things. Basically, they're giving to you what exactly an IT company does with a whole host of services. Now, remember, the company has been on a bit of an acquisition spree. In 2006 itself, they bought a company that's known as Faichi Solutions. Well, that was into business intelligence as well as into data warehousing. Then in 2015, they went for 360 Logica Solutions. Now, that company, in fact, gave them entry into the digital testing space, and gradually they buy it. So they bought it on 51%, then they hiked it by 25%, and now that's a 100% subsidiary. Then they bought DreamOrbit. Now that gave them a footprint into the logistics as well as the transportation domain. And just recently, maybe a few months ago, they bought a company that's known as Faichi Solutions. That one gives them an entry into the healthcare space. So what do they really focus on? They call it identifying the pearls and then stringing it together. So that's one of the key strategies. I went through the annual report and this is what it's mentioned. The second part is inch wide but mile deep. So they're getting to the bottom of it. For example, in UK, Europe, they're focusing on the telecom space, and there they're dealing with the B2B segment, but they're giving the ultimate solution. So that's something that they go by. If you take a look at the financials, well, the last few years, it hasn't been very, very great. Yes, they've gone from around 150 to around 270 crores, but the margins, they've been holding at around 13 to around 15%. This year, though, has been a tad bit better. But if you take a look at last year, well, FY17 to FY18, there was a bit of a degrowth in terms of the net profit. But looking ahead then, just the last quarter, that's quarter 3, looked quite good because they delivered a revenue number in excess of around 75 crores. The margin performance of that, that's around 15%, not 5%, so 15%. And the net profit as well was nearly around 7 crores. So quarter 3 was quite strong. And if you take a look at the 9 months and you compare it with FY17, then things look good because they've done sales of around 208 crores. So for the full year, they should do roughly around 270 to 280 crores, extrapolating what they've done in quarter 3. And in terms of net profit, they've almost done the entire net profit in the 9 months in what they did or in the entire of last year. In terms of other financials, well, they have a small debt of around 40 to 50 crores because they keep acquiring these companies and then growing them. Dividend payout of around 15 to around 20%. So that's fairly good as well. In terms of the geographic breakup, only 10% comes in from Asia and Pacific. The remainder comes in from the United States as well as the United Kingdom and Europe as well. So an interesting small cap company. But in terms of promoter holding, well, it appeared that the promoter stake had fallen, which I don't like too much. But I had a word with the management. What they said was that the employees' trust earlier was categorized in the promoter holding. Now, in fact, this 5% is not categorized. So that's the reasoning that they've given. Interesting small cap company. Let's see whether or not they can show some growth going ahead. And also, let's see whether or not maybe they can do, 28 to 30 crores in the coming years. Then, in fact, it could look rather interesting. But as always, not a recommendation.